Welcome to the Australian Property Investment Podcast, where we tackle the big questions in property investing. Our guests are industry experts, and we're fortunate to pick their brains on the challenges that investors often encounter when growing their property portfolio. Welcome to the Australian Property Investment Podcast. Let's start investing. G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I'm your host, Aaron Christie David, and I run a mortgage broking business called Atelier Wealth, where we specialize in helping property investors start out and scale up their property portfolio. Our guest today is at that scale up side, which I'd say they've gone through a lot of the teething pains and a lot of the failing forwards, as we like to call it, when it comes to building a thriving and quality property portfolio, which is why I'm super excited to have Sam Gordon on our episode today. If you've even scratched the surface of investing in property or looking at buyer's agents, Sam's name consistently comes up as someone that's been there, done that, and now helping others. And it's that kind of ethos where we go, tell me how you've done it, show me what the results are, and pay it forward by helping other people on their journey, rolling that up. And in essence, that you've done all that and more. So I want to say thank you very much for giving up your time and agreeing to be on here as well, Sam.
Pleasure, welcome. Mate. Pleasure. No, thanks for having me, mate. Looking forward to it.
Mate, big smile. We're having a chat. I think the team here was like, hey, mate, you want to get into this episode?
We're going to start, yeah.
We're having a chin wag beforehand, which I think just your nature, which is you're probably a sharer by nature, someone that's kind of rolled your sleeves up, got it done, and here you are. I don't want to kind of, I'm happy if you want to share how many properties you've bought, but this level of experience where you've gone, hey, look, I've kind of made it personally and now want to help others succeed and win in life. That's what I think makes the great professionals excellent at what they do, because they've achieved what they wanted to in life, and now they're happy to see others achieve as well, mate. So
yeah, definitely,
we'll kind of come back to that. But yeah, how I just open is the Australian Property Scout is your business.
That's the one.
Let's talk through the birth of your business as well, and its growth and evolution, but also yourself personally. So the 3 Ps, bit about yourself personally, professionally, and your property journey as well.
Let's do it, man.
Yeah.
Let's go.
So take me through the story, how you've gone to be bitten by the property bug.
Yeah. So, mate, very early on, it was funny. We were having as you say, the chin wag before we started was all about Wollongong.
Yeah.
And man, I grew up Southern Highlands, like originally. And when I kind of started, even if you wind a tad back before that, I left school at 16. It started year 11.
Yeah.
Pretty much just worked my butt off, tried to save up as much as I could.
Yeah.
At the time, I was trying to save for a Jap car. Like I love Toyota Supras. It was
mate. You and I, bro. I still look at them.
So why?
I still look at them. My wife is like, "You're not driving that." She'd be embarrassed. I was like, "You don't understand. This is like deeply rooted 100%. In like I don't know the first Fast and Furious."
Exactly.
Perhaps.
That's how I always describe it, man. It's like it's our generation of like the Fast and Furious, sort of when they first came out, the Supras and the Skylines and everything.
Yeah.
And that's what I was saving for. I was probably pretty fortunate, like pretty lucky that my old boy was a mechanic by trade.
Yeah.
And so I'd take him to these inspections and he'd just rubbish every single car.
My dad was a mechanic and it's like,
smash
you're
everything.
Not buying that. I was like, why do we just not worry about the engine for once and how good I look in this thing?
That's it. So man, yeah, it was pretty much exactly the same thing. And he kept just trying to talk me out of all these cars and just really just like giving him every single one a bad rap. I got over it after a while. But I still was saving really diligently.
Yeah.
And then, he said to me once, it was funny, man, like I've never really kind of had like a direct mentor or anything. But I remember one of the early things he'd said to me was just like, man, why don't you buy a property instead? And I'd always remembered hearing over the years that like super wealthy people that either make their money in property or they park their money in, they park their wealth in property once they've made it. And so, yeah, man, I kind of just started looking into it. I couldn't afford very much. Like I was kind of like a 250, 275K sort of budget. Like that was everything I had to spend.
The first purchase is the worst time in your life.
It's so hard.
You earn the lease and you save the lease.
Yes.
Yeah, it's the worst of both worlds.
The first deal is always the hardest.
Yeah.
It's always the hardest. But if you get it right, it can be an awesome platform and sort of building point for it as well. And that's what I really found. So I bought the first one I was 19 back in 2009. Bought a little 2-bedroom, 3-story walk up in Wollongong.
Yeah.
And it was good, man. It turned out to be a really good investment. It taught me a lot of things as well, buying below market, renovating for profit. It also taught me about negative gearing and how much I didn't like that strategy, especially as a low income earner, and that it really wasn't for me. But it performed really well. That was the first property I actually ever sold as well, but I sold it a fair few deals down the track as well. But that was where I really got bitten by it. It was a funny story too. I bought it. I was kind of going through the renovations and I went to the dentist And when I was sitting in the dentist, he had an API, which is Australian Property Investor Mag from way back in the day, sitting on the table. And I picked it up, and I'm never early, right? I'm very, very rarely ever early, right? And he was never late. And for some reason, this one time, we were both out of sync, and I was early, he was late. And I spent about 15 minutes reading this thing. And then by the time I left, I asked him if I could take the mag. He said yes. And then I went to the newsagent and just there was 3 magazines at the time. I bought all 3, subscribed to all 3, and just consumed content like nonstop. And then just all these strategies started building in my head. And it was really cool. I know that's why you like to get investor stories on as well. It was really cool to hear about how other people were doing well or what they'd done
Wasn't that the highlight of picking up those magazines, which is you'd flicked straight to like
investor
the spotlight.
stories. Yeah. Always, man. And that was it. And I learned so much from people, even people's mistakes that they try to make things sound like they were great. And you're like, if you read deeply into it, you could pick the holes apart of what they'd sort of done wrong, which was awesome. And then pick apart the guys that had done really well and what they'd done as well.
Yeah.
So yeah, man, that was pretty much it. And I kept dabbling in all these different little. And the next couple of years later, I did a buy and build in the Highlands.
Okay.
And then I started investing more for cash flow and then discounts and then really realizing timing cycles, buying at a discount, getting a good yield. Like that was where it really started to hum.
Yeah.
Where I started.
And all this kind of DIY? At this point, have you got anyone that's in your corner kind of helping you?
It was the magazines, man. So it's magazines back then were like the podcasts of today.
Totally, right?
So like, man, I literally consumed those things like nonstop for years and years.
When we started our business, I subscribed to 150 copies every month, and I'd put them in the mail to clients.
No way.
Yeah, mate.
Yeah, right.
And that really got that traction because that's our ideal clients and investors. I was like, here, have the knowledge, mate. We'll give it to you for free. But put some good knowledge into your ears. So
man, it was awesome, mate. There was so much good stuff in them. So that's really where it all built. And then I started buying 2 a year, then 3 a year, and 6 a year, 10 a year. Just kind of started going crazy,
Unreal.
So
that snowball success, I guess. Yeah, you get to the point now where it's like you almost. I think what we're trying to say is decision fatigue, where you got to say yes to less, and like you got to kind of know when to say no.
Yeah.
How did you kind of go to the point that you're knocking out properties, saying yes to this opportunity, for example? Because anything looks like a good opportunity, right? At the time, you're like, oh yeah, I can do it. I can see the value in it.
It always came down to proper value. So like that's how I've always been. Like I've always got to buy things at a discount. Even still, man, like I've done pretty well for myself. I'm pretty wealthy these days. Yeah. I still will buy whatever's on sale at Woolies and Coles. Man, it's just
we're hardwired for a bargain.
Man, 100%. Like I don't think it'll ever change. And I think like when that's the way it is, and then you're always hunting for that bargain and that deal, you won't buy something that's not that. So I feel like that's where I just got really good at sniffing out a deal. And yeah, man, I love it as well. I love the like they talk about like the art of the deal, or like the hustle of putting something together. Like I love that because it's an adrenaline rush, when you get these good things together. Probably doesn't hit me as much these days as it did back in the day, but it's cool because these days I get to do it for clients.
Yes.
And when you see, a guy comes in, he's got 60 grand, and you can make him half of that on the way into a deal. He's literally halfway to his next deposit. If you've also bought it in the right area and does 10% that year, within 12 months, he's got a deposit to buy another or faster.
Well said.
So that's how I love it, man.
When we talk about, I guess, the negotiation part, I had some clients and the conversation goes, and it's like, you're making money on your buy, for example. And one counter to that has someone's like, well, you buy an expensive watch, you pay retail, like you pay you're not going to get a discount on quality. And do you get that from time to time where people go, how do you get discounts on, if it's real quality, why would they discount the price, for example?
Yeah, man, like everyone's circumstances are different, right? So there will always be, call it 10% of the market that has to sell quickly, or they want to sell cleanly off market. They don't want to have a hassle of a sale. So to get a top dollar on something, it's a hassle. It's a negotiation. If someone wants top dollar, it's the same thing. Agents and sellers have got to push for that top dollar. Yeah. There's always 10 to 20% of the market. They don't want to go through that. Maybe they've owned the property for 30 years and, 30 grand to them, it may not be that much if it's debt free, or they may need to get out of a deal really quickly. Like now is an ideal time. Like when you look at it, of those exact things, like we actually had heaps of it. We're recording in the first week of July.
Yep.
In the last 2 weeks of June, we had this huge rush and influx of all these agents coming to us going, these guys realize they need to sell because of interest rates. They want to get it into this financial year. We don't have time to go to market. What can you get us? Literally, what can you get us? Not even this is what they're after.
Wow.
Sometimes that, but a lot of the time it's what can you get us? So we snagged some absolutely ridiculous deals like in those last 2 weeks. But there's always situations like that. You know, everyone's situation is different. Not everyone has the time or the luxury to wait for top dollar. And so it's just looking for that opportunity and being patient. It was like you said before about like how do you pick apart the right deal? It's just being patient, not rushing. That's probably the biggest mistake I see people make. You probably do as well. They go takes 2 months to get a pre-approval, especially like in the crazy times of COVID. Everyone's different, right? But different people, or maybe they've saved. It's taken them 2 years to save for a deposit, and then they get the deposit, they get a pre-approval in a week, and then they bought something in a week, and it's like, mate, you just took 2 years. Like, don't make a snap decision. Take your time and make sure it's 100%. Yeah. Unless they did research for this, say 6 months leading up to it. Yeah, it's all about being really correct and finite with that.
Yeah, it's that rush of blood sometimes. Where it's like the first one, they're like, we're falling in love with it. I was like, I don't know about you guys, but I say generally it's our average at the moment is probably looking at about 25 to 40 properties thereabouts. Yep. So you think about it, you're going to see 1 or 2 properties every week over a 2 or 3 month period. That's where we get our stat from. Our time to go from a pre-approval to pulling the trigger on us and putting pen to paper on a contract to sale is somewhere they've looked at about 20 odd properties or they've missed out on a couple, gone on auctions, for example. You're probably the same way. You kind of go, your trained eye is going, that whole analogy of John West, John rejects the biggest, the best, whatever the tagline is. It's a bit like what buyers agents go through. Like they're rejecting a large amount to the untrained eye. It's like, hey, what's wrong with that? So take me through like the secret sauce or due diligence that you're going through to reject versus approve or shortlist as well.
Yeah, man, it's actually a great question. It's funny, man. No one's ever asked me that, right? Because it literally, man, it's a great question because
I ask every buyer's agent that because I'm like, how. That's what clients effectively are paying you for, which is it's almost an insurance policy against brain damage on buying the wrong asset.
What you got to be super careful of is we've seen a lot of buyer's agents out there, and I actually got burnt by a buyer's agent a few years ago as well, back when I was 26, I think it was. I'm 33 now, so it was a while ago.
33, mate, baby face. Bloody hell.
But it's what gets me, it's what got me into it. I know we're going to dive into that in a sec. But yeah, man, it was one of those things that triggered me with it, and I see it a lot still these days of sometimes the deals is off market, so then they'll sell it to a client as being a great deal because it's off market. But realistically, off market doesn't mean anything. It just means you're getting access to it before it hits the market. It doesn't mean it's a great deal. It all comes down to learning your market intimately. So when I said before, like if you're going to do it yourself, it's like 3 to 6 months. You should be researching a market before you pull the trigger on something. Yes, you can't learn a market for 2 weeks looking at realestate.com and seeing what's trading, especially right now we're in like the tightest stock market the country's ever seen. Man, if all you're seeing is what's coming through and selling online, like they have probably been passed on almost every deal by a buyer's agent that had the opportunity to buy it off market, and they're probably going for market value or potentially above. So the real key thing, especially with what we do, is just knowing that market intimately and seeing value in that deal, or where can we add value on that deal? Like where does it really come into it where it's essentially a deal. Like what makes it a deal will really come down to that value that comes through. So maybe we would reject probably at least 500 deals a month, I reckon. Like individually with the BAs and the team, man, we all get sent. It'd be 20 plus properties a week. We all would get sent. You might buy a handful from that each, max, maybe 1 or 2 a week each week we're probably buying. But like look at that. That's a 5%, close on what we get sent. And realistically, that's what an excellent buyer's agent should do. They should get access to a heap of stock, but only buy that small portion that is actually deal quality and deal grade. And that's the thing, man. Like the idea of like, whatever you pay is retail, and it's not, man. When it comes to actually anything, like yes, when you go into a store that you can't haggle someone down on, right? But realistically, when it comes to something like this, it's such a big dollar, big ticket item. There's always discounts to be had because everyone's situation is different. Some people will be happy to hold out, but not everyone's happy to hold out. Some people need to go quickly or for whatever reason. So always looking for those opportunities and where can we pounce and. Sounds bad, but exploit that opportunity for our client, so.
And shoe goes on the other foot. I mean, dealing with trained real estate agents who are expert negotiators. I mean, you look at Arik and they've got they've got like an FBI negotiator talking about how to, the art of the negotiation.
100%.
Right? So I say this to clients. I'm like, you go up against a real estate agent.
Yeah. And you've never bought before?
You've never bought before, or you're going to go in there and offer it 1050 and it's like they know there's juice left, there's a squeeze there, right? No one comes in with a round numbered offer and it's like that's the max that you've got. They know there's more there left to squeeze, and they get every dollar that they can out of you, and they're doing their job for their client, right? Just like you're doing your job for your client who's paying you to get the lowest value, highest value, lowest price. The agent wants the highest price.
I think, man, it's a great point you make because so many Australians, they think they know how to do it or they think they can do it.
Yes.
But literally you're working against You're working against people who do it every day from a negotiation side, from the sales, but you're also working against essentially the buyer's agents that do it every day as well. Because like we don't hunt on the weekends or in the nights on our time off. Yeah, we do as well, but we also do it
day job
8 till 6 as well every single day too. So it's not like it's just like the side hobby. It's literally a full-time profession. From the negotiation to the sourcing to the relationship building to getting access to everything and even all the different avenues of getting access. There's so much to it, man.
Yeah, well said. Well said. You just mentioned before, we're recording this first week in July, kick off a new financial year. Some people have aspirations to buy this year, for example. You mentioned kind of mid-year clear out on stock, for example, as well. You've probably got a few, potential clients that are coming through going, oh, look, I'm thinking about investing next year, or this is just not the right time. I'm going to sit this market out. So sales agenda aside, because you and I have no vested interest. When they buy, I mean, I talked to a client yesterday. I spoke to them initially 3.5 years ago. Now they're back.
I've had those.
Right. And so just purely being around for a time, you get people that return to us as well. So what's your counter, or what would be your rebuttal to someone going, is this the right time to buy? I don't think it is.
There is always a location that's worth buying in, right? So people say, like you said earlier, like people, you always make your money on the way in. You make a portion of your money on the way in, right? Like the right location will do 80 to 90% of the heavy lifting. You can make 10 to 20, but you're not making 80 to 90 on the way into a deal.
So true. Yeah.
So if you're timing markets correctly and you're going and buying into the right markets at the right time, man, that's what's going to do the heavy lifting, right? To say that there's no markets that are going to produce that, it's like you look at majority of the country last year went backwards. I could name you over half a dozen locations that did 20 to 30% growth last year. You're buying a 400K asset, that's $100,000 in growth in 12 months, and it's doing it again this year. And it will do it again next year. And there will be other markets that will do it as well. So like their markets move in their different cycles. Different markets are extremely affordable. Then different projects will come into an area that will just put it on fire. There's always locations that are worth investing in. If you have a look, there's actually a really interesting graph out there. I can't remember on what platform it's on. But it shows over the last 30 years all the capital cities, right? So it doesn't even take into account the regional centers and hubs, right? It's just the capital cities. There is always at least one or two locations like going through significant booms at any one time. The issue is that majority of the Australian headlines are on Melbourne and Sydney because more than half of the country lives in those two cities, right, combined. So I think like when you take that out of the equation, you actually look at it from a macro level. And what does the country do? There's always, like literally, if you go find I'll try and dig it out and I'll send it to you. But if you find that and you have a look at that, there is always somewhere growing. It's always the case. And when I say growing, markets don't do. There's this old adage that markets double every 7 to 10 years, and
is that true?
So people think it's 7 to 10% a year gets that 7 to 10. It never happens, right? Like almost every city sits stagnant for a decade or more before it starts its run, and then it doubles in about 3 or 4 years. You look at Sydney, people are like, no, but look, what about Sydney? And people forget, in 2003 to 2013, you could buy property cheaper in 2012 than you could in 2003. Wow. There was 10 years where the market slowly slid back and then it doubled in 3.5 years. And this is where there's always those opportunities, but you look at that stagnant period for 10 years, if you were in Brisbane, Perth, Adelaide, majority of regional centres in the country, you would have doubled your money in that time frame. So there's always somewhere to double your money to make significant gains, and then there's always places to avoid during those windows as well. So yeah, I'm a very active, like I almost call myself like a trader with property. I have two different strategies. I love cash flow, so we'll target and we produce and manufacture high yielding, high cash flow deals. And for us, like they're the deals we want to hold forever. But then we have our other deals, which is what we call our bread and butters. They're essentially growth properties. For me, growth properties are there to get in and get out. So you want to enter a market early. You like that example. Let's say you buy in 2012, in Sydney, and then whether you sell out in 2017 or whether you carry it the whole way through, for 2 cycles. But realistically, if you'd bought in at 2012 and sold in 2017, you would have more than doubled not just your deposit, your money. I'm talking your purchase price. So it's significant ROI on actual capital into deal. But yeah, man, like if you hold it beyond that period, it's almost like losing money with inflation with that 10-year stagnant period, because you could pull it out, put it into a different market and double it again. So that's the way that I roll, and that's the way that I play with property when it comes to growth. Yeah,
and I guess we literally had this conversation before with another guest, which is the cash flow. It's tangible. You can see it. You can bank it. For example, the capital growth side, you've built your portfolio off the back of capital growth to pull the equity out to go again to upgrade your portfolio. So the capital growth is the necessity. I think you call it your bread and butter, for example, and that's what you need. But it's harder to make that tangible because it's the future and you can't
both are necessary.
Predict it.
Yeah, both are super necessary because you can't build one. You can't just keep building on growth, nor can you keep building on cash flow.
And we see it. You probably the two hindrances for an investor is running out of borrowing capacity or running out of equity.
Capital,
So and quite often they're kind of faced with two, and that just the frustrated investor comes in, right? So I guess looking forward, and you're probably talking to other clients where they've probably got the ability now. It's like rising interest rates, and I guess that handcuff as well. How are you having those conversations with people going, it's a little bit tougher from an investment side as well, or is it really?
It's just part of the cycle.
Yeah.
So like 2% interest rates were completely out of cycle. You know what I mean? Like they were ridiculously cheap.
Yeah.
I think the biggest issue is people have gotten used to 2% interest rates, 2 or 3%. So
Got
now they're
got addicted to it.
100%. I did, man. Like it was amazing. It was the best, but it was never going to last.
Yeah.
You know, and man, I saw people out there putting modeling out with 2 to 3% interest rates, like for cash flow and like for long term. And I'm like, mate, it's never going to stay like that. You know, and you and I both know long term rates are typically somewhere between 5 to 6. Yeah. In terms of that long term interest rate
which is why the banks were using 7.25% as their assessment rate because it was a 30-year average, right?
Yeah, 100%. So yeah, man, I feel like it's there's always a good time to be getting in and to be investing. Yeah, people are like a little more nervous around it as well. But mate, if something costs you, I always look at it like if something costs you $2-3 grand a year, but even if just on really low, even if it was $5 grand a year, but it was making you 40 grand a year in growth or 30-40 grand a year in growth, it's a no-brainer for me. Something I always say to clients, our deals very rarely ever get to a 5,000 per annum net negative, like even at today's interest rates, they very rarely ever get there.
Yeah.
But I'm like, if we can make you 20 on the way into a deal on a $400,000 property and it grows 10% in the next 12 months, that's $60,000. Would you give $5 grand to get 60?
Yeah,
of course you will. You know, like when you put it in that, it's a no-brainer. But people just see the 5 or the 3, or they see the red cash flow sheet, the little red balance, and it's like, oh my god,
the brain can't get the brain actually can't get past it. It's like the monkey brain kicks in, and it's like, boom, wrong deal.
But it's part of it. You know, it's all part of it. Current interest rate environment, it's fine. You and I both know it's going to come back at some point soon anyway.
Yeah.
But it's part of the game. You're going to sit out and do your dough on not making that growth now for the sake of, let's say, $5K per deal in the next couple of years, or you're going to sit out and jump back in when everyone else jumps back in and have missed that cycle.
You're probably a bit like us, where you've got maybe a classic bell curve of clients. So you've got probably that top 10% that are ambitious, going to grow, market resilient in terms of that.
Don't care.
They don't really care. I've got the ability to go again, draw that equity out. Let's go again, buy another bad boy. And then you've got this, I think, that middle tier, which is rate sensitive, market sensitive, for example, will move when the herd moves, for example. And you got these last 10%, which they're a little bit hamstrung in the sense they're probably maxed out, or they don't really have that as ambitions to grow. So how are you, I guess there's two parts to it. How are you serving that top tier, which are highly ambitious? You know, they're going to move to their goals and they're going to execute their plan to absolute perfection.
Yep.
And then you got this other middle tier, which they've got. It's almost like at school, has potential. Maybe is just influenced by other kids.
Need to apply themselves more.
That was a report card. Has a lot of potential, but needs to apply themselves more, which is the story of my life. So how are you kind of moving the needle with those type of clients versus your top tier clients as well, mate?
We're probably lucky in the sense of I invest pretty aggressively, and I got like a pretty forward approach, and I seem to attract a lot of clients that are like that as well.
Nice
so
one.
I'm pretty fortunate from that perspective. A lot of guys are just like, they know you invest when you can invest, and so they'll keep pushing and buying as many as they can, especially when we can pull equity and we do cash flow deals. They can keep building the portfolio and keep growing. So we're very fortunate that a majority of our clients are actually sit in that echelon, essentially, of clients.
Yeah.
For the rest of the guys, it just comes around the education. So it really just comes back to stripping it back to like those examples before of like, yes, it may cost this during this time frame, but then just spelling out, this is what we're looking at moving forward. And they're very conservative estimations as well, obviously, like kind of what I gave you before, those locations, 20-30%, in a 12-month window, saying 10% is quite conservative. So I think once you spell it out on that end, and when you're making a discount on the way in as well, that's really what I think sets the pace for a lot of people, just to understand, to be able to get past it. And all they need to do is trust us to pull the trigger on one deal, and then they see the result, and then they fall into the top bracket because they're like, okay, that actually worked. It did grow. Who cares if it costs us 5? Because in a 12-month window, we pulled out 60 or something like that.
Yeah.
And I think they're the moments where their perception changes and they're like, and literally that's when they fall then into that top category. I think that's why we have so many people in that, because we have so many repeat clients that have had the win on 1, 2, 3, 4 deals, whatever.
Yeah, nice.
And they've had the win and they keep having the win and the properties keep performing. And then the time comes where it might be time to sell, or it might be time to, say, build a granny flat or something. And they pull the trigger and then they get the results. And so all these things just keep moving the needle, and that just keeps building our essentially our client base, those guys that understand it because it's worked for them. So I think that's the biggest thing. And I think when it comes to BAs especially, you got to work with someone that's done what you want to do and like realistically done what you want to do, with a really good track record of helping other clients with it as well. And then, you know, you can invest in them and with them and back them to help you get those same results.
Well said. Yeah, well said. You want to be led. Slightly different tack, if I can. The home ownership crisis, right? I read a couple of these articles occasionally, just kind of keep my finger on the pulse and what's the litmus test for the public opinion. And then you get some ideas thrown around going like, we're going to cap rents, for example, or freeze rents, which will impact the investor. Or it's like, hey, investors should be capped at a number of properties that they own. Highly, highly controversial. Trying to tell people how many properties they can own. And then you hear an occasional story about a buyer's agent. Here's how many properties I own, and the comments are just like, how dare someone own that many properties, and others are struggling.
Been
right. They didn't want to put you in it, but I've seen it, right?
Yeah, of course.
And I'm going to punish people for taking action. I'm like, well, where do we draw the line here?
Yeah.
So 2 parts of the question. Do you feel guilty for your success is one part, and and the other part is, how do we solve the home ownership crisis? Because there is definitely an issue here as well. Yeah,
man. I think I'll answer your second one first. Yeah. Because with the home ownership crisis, I think the thing that I look at is my timing of when I wouldn't say I was that lucky, because I bought into Sydney in 2009.
No, don't use the word luck. Luck is you had the ability and you had the attitude, so you make your own luck, right?
Yeah, no, I understand completely. It's a tricky one because now the reason I say it is because now for someone in my position back then, like when I bought my first property, I was making 39 grand a year, like nothing. Great. You know what I mean? And to buy that first one, if you were making that now, you can't buy in Sydney, and that's why I'm
struggling to pay your rent.
Yeah,
right.
Yeah, 100%.
Like
and that's why, like, you know, I use that example because it comes down to where you live. Yeah, and if you live in Brisbane, Adelaide, Perth, Hobart, probably most centres in Australia, there is probably somewhere you could afford to buy within that city still. Yeah. But it depends if it's where you want to live. And this is where I think the big thing that is massive these days is rent vesting. Yeah. And like I still do it. I for the first 8 years of my proper, so I'm 14 plus years into my investment journey now. For my first 8 years, I lived in my own house until I realized the power of rent vesting. Yeah. And I realized what I wanted to buy, which funnily enough is pretty close to where you live now as well. It was like well outside my reach at the time. Yeah. But as my portfolio kept growing, so did my aspirations of what I wanted to buy to live in. Yeah. So it hasn't made sense yet to buy anything as a primary residence. So I still rent vest. Yeah. And I think that's one of the big things is like people think, and yes, it is to an extent home ownership out of reach for a lot of people starting out, but it's because their level of what they want to buy, it's like what their parents own who are 30, 40 years older than them.
You don't start where someone's finished. No. And it's a very hard conversation to have because you take our area down, Wollongong, the Illawarra, for example, typically kids could buy in the area. Yeah. In Sydney, that ship sailed years ago. Yeah, ages ago. It wasn't even a thing. You never bought where your parents lived, but some of those other areas where it was like, hey, the kids could be 10 minutes from us, and that was the allure of being down the coast or on Central Coast and above. Yeah. That's not achievable. Yeah, so that conundrum's there for a lot of those communities that are wrestling what Sydney and Melbourne had for years. Yeah.
But I think this is where it just comes into, rent where you and this kind of goes back to your first question, do I feel guilty? No, because I made a lot of sacrifices along my journey. Like I went 7 years where I didn't travel, and every time I had a holiday, I went and renovated a property. Like every year, I used to have 2 holidays a year.
Back when you could claim the travel.
Man, I used to sleep in my ute. I couldn't afford to pay for a hotel. You know what I mean?
I'm glad you said it, mate. I'm glad you said it because we literally had Trinity, one of our team members, come in. Yeah. She's 23. Yeah. 2 properties. Yeah. And she said, I haven't traveled overseas. Yeah. And I'm like, mate, every 23-year-old's chomping at the bit to go overseas and put over bloody Insta. And she's No, 2 properties, and she will travel when the time is right.
Yeah.
But yeah, making sacrifices is not the popular conversation to have.
Yeah, definitely not. Dude, when I was 20 or 21 or something, I did 2. You could actually travel pretty cheap back then. I think I went to Fiji, cheap as chips, right? And then I went to Canada. And again, it was like a $3-4 grand trip.
Yeah.
And then that was at
And the
2021.
Aussie dollar went further than what it did today.
Yeah, it was good. It was like $1.10, man. It was massive,
I
right?
traveled on that too.
But man, that was 21, and I didn't travel again until 28 when I went to Europe in 28.
Yeah.
And those whole 7 years there, all I did was invest. And soccer season to finish, I'd already have the vacancy ready, so I could drive straight to a place as soon as the season finished.
Yeah.
And renovate that place completely. The 2 years over Christmas, I used to do the same thing. I'd drive somewhere, I'd drive anywhere, and then go renovate my properties. And I literally just did that for 7 years. It's like the guilty question. It's just like, definitely not. Like, if someone wants to put in what I've put in, like you can't have a whinge, because if you put in what I put in, you would be at a really good spot. You wouldn't be struggling, let's say. And I think the sacrifice part, like you say, with Trinity there, like what she's done is amazing. It's absolutely crazy to have achieved that. And hats off to her, because so many people wouldn't make that sacrifice.
Yeah.
But I think what's important is like making that sacrifice when you're young.
Yeah.
Even if you do it for 1 or 2 years, even if it's living back at home with mum or dad, or living somewhere cheap, renting with a mate or something like that for a couple of years, and investing interstate. Investing in a regional hub or somewhere else that you can actually afford to buy, that's in a great point in its cycle. Make a margin, make a discount on the way in, buy at a right point where it's going to grow for you, have a good cash flow so it takes care of itself.
Yeah.
You start to buy 2, 3, let's say you get 3 of them and you got over $1 million worth of property. Even if that's all you did, and then you went and did a couple of European trips or whatever in the years after it, you got $1 million worth of property, and then it has a nice run, goes up to 1.5, 2 mil.
Yeah.
There's $500,000 to $1 million in equity, essentially, that you've just made there in profit. So I think people have to look at it from that. Everyone's like, I want everything and I want it now, and it's just not possible. You have to be realistic with the journey. Property is not an immediate thing. It takes time. Like I've done pretty well, but I'm also almost 15 years in. That's a huge amount of time.
Overnight success, 15 years in the making.
Yeah, that's it, man.
Yeah, I feel like, and the reason I kind of asked that question is, no one would slam you for your business success, because there's hard work, there's grit, there's failure that typically happens, there's a roller coaster. But when people have done well from a property side, everyone's really quick to kind of take a few pot shots. So I'm like, there's no different. Investing in properties, investing in business, another asset class, both you've had to make huge sacrifices, fail forward, brain damage on the way through, heaps of lessons learned, usually expensive lessons. And you see the finished product where they've had to push through. You've probably been told so many times by banks, no, let's find a way to get, you missed out on properties that you wanted. And
100%.
the resilience is such an underrated quality. It's so easy to go, the market's hard. And I often quote this article that SMH is saying, 10% of Australians can go on and buy a property. I was like, you peddle that message and people are going to buy into that message.
100%.
You put this message out here that, hey, look, someone can actually go on and acquire X number of properties and here's how to do it. It almost feels like it's a sales pitch. It's like, well, hang on, mate. Here's just a blueprint. If you wanted, it's not you, it's someone else, but it can be done in this country, right?
I've had clients on 60, 70 grand and they come to me 50, 60 grand and we get them 3 deals in 12, 18 months.
Mate, I can do more with clients that are earning 65 grand than 260 because the 260 grand clients have a lifestyle.
Yeah, they live on that. Yeah, they live that lifestyle.
It's the vehicles, the holidays, the bottles of wine. I'm like, I can't rein your lifestyle in. It's at a certain standard. And I live at a certain standard too. But man, I traded my car in and bought a really cheap car in cash. And the first question everyone asked was, is business not going well? I'm like, it's actually going that okay that I can trade the car and not have to worry about image. But it's those things where you go, hey, mate, there's sacrifices that need to happen. And those that are willing to swallow their pride or make adjustments are the ones that are going to reap the rewards and benefits. Yeah, mate. I really appreciate how you kind of shoot from the heart, mate, not from the hip. And I'm proud that you've got your own podcast. It's great to have another podcaster in here because I can do less talking. But take me through what's inspired your podcast and how can people find out more as well, Sam?
Yeah, man. So obviously our podcast is Scouting Australia, is the Scouting Australia podcast.
Yep.
It pretty much came off the back of you and I were having a chat earlier of you have like almost exactly the same conversations with clients every day and multiple times a day.
Yeah.
I didn't jump on podcasts that much like externals. I jump on a couple a year and there was a huge
I'm really appreciative, mate.
No, mate, it's an absolute pleasure. Yeah. And I used to jump on them like a few times a year, right? And there was all that lag time in the middle where people are listening to like everyone else's content. And I'm very bullish on our strategy and because it's worked exceptionally well for me. I see a lot of people, they go and peddle all their stories and their strategies and everything else and they haven't actually done what they're talking about. So I'm very, very bullish on it. And that's why I'm like, you know what? I'm just gonna do my own one. We'll release an app a week, and I'm just going to smash out all the stuff that people ask me every day.
Yes.
And I'm just going to break down again and again in all the different ways in terms of our strategy and really what I did within my own portfolio as well. And then bring on investor clients for their stories. And it just like, for one, the investor stories always inspire people.
Yes.
But then the ones where we're and showing people what's possible. Mate, there's one, if people are interested about this and they make that comment, Morgan, who's actually my partner as well.
Yeah.
But when she first started the business, man, like the business wasn't killing it. She was on 60 grand a year.
Yeah.
Man, she has done 5 properties, like bought 5 properties in less than 2 years, and she's got over $1 million net equity. And anyone can go through our bank accounts. I never gave her a cent. She did that all on her own.
Nice.
And she's built $1 million net equity in less than 2 years with 5 deals. Man, not many people can do that or have done that. And there's plenty of other investor stories done 3-4 properties in a 12, 18, 24 month window and created really, really good, really amazing portfolios. And so I love getting those guys on. They love sharing their stories as well. And then it's really just continually pitching the same message. Because the biggest mistakes I ever made in my portfolio was when I deviated from my path. So it was when I deviated from my strategy because like some great deal popped up and it was a mad deal, but it took me out of the market for 2 years because it was a development. Awesome. And I made, let's say I made $600,000-$700,000 in a deal, which I did, but then it took me out of the market for a while where I could have bought other properties, bought them at a nice solid discount, missed a couple of markets with their run.
Yeah.
And so it's like, the trade-off for it was actually, I made a lot, but how much did I actually lose out on? And so this is where I just wanted to keep kind of peddling the message that is the right, in my opinion, the right way to invest.
Yeah.
And really just breaking it down for people so they can understand it and continually learn about it as well.
Well said. Yeah, well said. Yeah, the power of the podcast platform is people opt in, they consume it in their own time. But I think where you and I were talking is we could say it again, but because we're coming at them with so much information, that one intro call or that follow-up call, they're just like deer in headlights and ask them, what can you remember? And they can't retain it.
100%.
Whereas I find this type of medium, the retention is much higher. One, they've opted when to listen to it and at the speed they listen to it and a time that suits them.
And if they love it, they can listen to it again and go, I just want to pick that up again. So many of my guys have heard them say, oh man, I actually listened to this one 2 or 3 times because I just like, I missed something in the first one. And I was like, oh my God, like, because there was something else mad before it. I used to do the same thing. I actually used to listen to people's potties and I take notes. I'd literally go through in there and take notes.
Yeah.
And there was a young fella I hired just recently. And he said, in his interview, he was literally a client. And then we brought him in and he said the same thing when he said it. He already was reminding me of myself. And then he said he did that. I was like, mate, you're hired. Like that's literally me 10 years ago.
We hire people that are just like us. So we get this company of mad people running around because you're just like me.
100%, man.
Yeah.
Nice. So it's good, mate. I honestly love it. I've got a co-host on there as well, Jimmy, and he's again, client success story. He's done 10 properties in 2.5 years.
Wow.
Created a ridiculous portfolio for himself. And it's just, mate, we get on there, we have a laugh and we just love it. We both love property. We live and breathe it.
Yeah.
We just get in there and we just rip each other and talk property. So.
I love it. I think when you just say that, your partner, sorry, what was her
Morgan.
name? Morgan.
Yep.
Say the stats again. How many properties? 6?
She bought 5 properties
5
in less than 2 years.
Yep.
Her first 4 were actually in 12 months.
Right.
Because she just stripped equity bought. But then she had like 12 months where she had to renovate and get some things done and everything. But then so it was 5 properties in less than 2 years.
Yeah.
Generated over $1 million net equity in that time frame. And she's 26.
Something happens, I find, when you say it to people, like the monkey brain kicks in, or like that can't be me. And it's like, well, why can't it be? Someone else
100%.
has done it.
Yes.
And I say success leaves clues. I say that multiple times in our series as well, just going, why can't that be you? And that's why the power of those stories where you share it, pay it forward, you inspire others. I want to say thank you very much, Sam. I know that
absolute pleasure,
mate. You could keep going. That's why you got your own podcast because it just rolls off the tongue for
mate,
you,
I love
mate.
talking about property.
Right? And this is
it's the best.
I had someone the other day go, but what does Aaron actually do in the business? And then someone he just does this stuff, mate. And we get enjoyment from it, right?
100%.
Because we can't actually talk to that many people in the hours that we've got. Yeah. So this is a really good way to broadcast and go out to more people as well. So if you are interested in speaking to Sam and his team, we'll include the details to his podcast or to his business and to their socials as well. So I always say, when you go down the path of picking who your partners are going to be, do the research. Do they align to you? I think you nailed it, which is, have they been there, done that? Are they living and breathing what they're actually purporting out there? And are we aligned in terms of being a client? And do we get on and do we see the world from the same view as well? So I want to say thank you very much. You've been generous with your time, your wisdom, your knowledge.
No worries,
mate, you will go very, very far, and I wish you every success as well.
It's been a pleasure, Aaron, mate. Thank you very much.
Thanks, mate. That's a wrap for another episode of the Australian Property Investment Podcast. I'm your host, Aaron. If you found this helpful, drop us a comment or leave us a review. It goes a very, very long way as well. Thanks very much. Until next time, take care.